Well, retail results out this morning for Macys and Lowe's. Both stocks surging as they beat expectations in their latest quarters, despite seeing sales fall. We also got a somewhat downbeat report from the Conference Board Consumer Confidence, falling to 106.7 in February. That is from a revised 110.9 in January. Joining us now on this is Sucharita Kodali, Forrester Research Retail Analyst. Good to talk to you today. Let's start with Macys because we are seeing that stock up in a big way, nearly 4%. What did you like based on the results we got?
Well, Macy's exceeded expectations, but the numbers by no stretch of the imagination were wonderful. The sales for the last several quarters had been down in the mid-single digits, and this past quarter, I think, was perceived positively because it was down, but only in the very, very low single digits. Some of the things that actually concern me are that its digital sales numbers were down lower than its bricks and mortar numbers. That is unheard of. Typically in retail, everyone's digital sales numbers are stronger. But for them to have softer digital sales in a world where more shoppers are consuming through e-commerce suggests to me that they may be losing disproportionately a lot of market share. And certainly as they are closing 150 stores over the next several years, that some of that market share presence, that story doesn't look great when you look ahead.
Yeah, it doesn't look great. And as you point out, I mean, this is a company that is still trying to find the right turnaround mix, right? We are seeing the company close those Macy's stores. They're trying to focus more on the high end with Bloomingdale's as well as Bluemercury. What does that mean for the Macy's brand?
Well, I think that the Macy's brand ends up being some of the really, really premium flagship locations. I think that they're going to try to hold on to the Herald Square store for the sake of their balance sheet. Hopefully they're able to hold on to it, but they may end up doing some sort of a sale leaseback and unlocking some of the cash that is in that store. So certainly there is some real estate that is really the big asset that Macy's has. But your point is a good one, which is that they do seem to be diversifying to these other brands. So they're opening nearly as many Bluemercury stores as they're closing Macy's stores. So Bluemercury is often in some of the newer malls. It's in higher foot traffic locations. And it's good margin because it's beauty products, but it's a small store, and each individual location is not going to make up for what they're probably losing from a top line from Macy, the closure of a Macy's store. So I think really it's becoming a smaller company. But the hope is that the profitability story improves by investing in high-end luxury with Bloomingdale's and beauty with Bluemercury.
Sucharita, with Macy's specifically, though, I mean, it feels like the company is moving away from the large department stores we know Macy's to have to a smaller footprint. Is that where retail is going? Is that the right strategy here? When you consider what you pointed out, they're not even getting the bump in digital right now.
Right. Well, I don't think that it's the story. It's a great story in the department store sector, and it's not a great story for a lot of mall merchants to have these large physical footprints, especially because in many of Macy's categories like apparel, footwear, more and more of their shares of sales are migrating to e-commerce and the web anyway. But that's not to say that every large store is suffering. I mean, you look at the warehouse club sector, it's doing very well. Mass merchants like Walmart and Target are generally doing very well. There are large box stores that are continuing to grow, like Tractor Supply. So I don't think that the story of large box is a bad one. But keep in mind, all of those companies that I just mentioned, none of them really have presence in the indoor malls that Macy's is in.
Let's talk about the companies you do like: Walmart, Amazon, Costco, another one. Is it about sort of staying in the grocery lane right now, or more diversified retailers in this environment where we're seeing more and more that consumers are being a little more discriminatory in how they doll out some of their discretionary spending?
Yeah, the consumer is spending in very specific categories now. So certainly food is one. The mass merchandise sector is another, with a lot of consumables. Beauty and health are actually doing pretty well. When you look at even Walmart, some of their strongest numbers are in their health and wellness segment. So that's a sector that is absolutely resilient. And that's also, interestingly, arguably part of, kind of some of the bright spots in the Macy's portfolio, is where some of the Blue Mercury numbers are. So there are places where consumers are spending. Consumers are also spending a lot at food away from home, which is the restaurant sector. That's been disproportionately positively affected and has been growing incredibly strongly in the last several years. So there are places where, in spite of lower consumer confidence, the shopper is still spending. And some of those brands that we did talk about that are doing well are certainly leveraging some of the success in grocery in recent months, but are also just the places where consumers often trade to if they are feeling economically pinched. So that's part of it too. Those are often recession-proof businesses, like a Walmart or an Amazon or a Costco, because people go there when times are good. People go there when times are not so good.
Finally, we did get the consumer confidence index today, that falling after 3 straight months of gains. Economic data seems to point to the fact that things are pretty resilient, and yet consumers aren't necessarily feeling that great. What do you think's going on?
This has been an issue for months now, where the consumer says one thing and has been doing something different. And the consumer confidence numbers, when you dig into who is particularly distressed, or who is perceiving that perhaps the economy is in worse shape, some of it is politically aligned. Some of it is younger consumers that may be taking on more expenses, like paying back student loans. Some of it may be the consumers that are not that are either unemployed or have experienced some hardships in transitioning to other employment opportunities. So there are sectors that certainly are expressing dismay, and that, I think, is dragging down some of those consumer confidence numbers. But when you look at the overall levels of shopper spend, those levels are incredibly high, and they're much higher than 2019 levels. And I think that it's very, very difficult to reconcile, well, if people are so distressed, why is it that they're spending as much? And it suggests that maybe there are a lot of people that are not that distressed, because wages are at an all-time high, and overall unemployment is relatively low, and the labor market is tight.